16th of February 2026. Expiry -1. Today's session reflects structural repositioning ahead of settlement. Price opened at 25,423. An early low printed at 25,372. From there, the market stabilized and gradually advanced. Session high was recorded at 25,697. The close came at 25,682, a near high settlement. That detail is structurally important. This was not a volatility expansion day. There was no disorderly move. Instead, this was a controlled positioning adjustment into expiry. Now, participation. Cash market turnover closed at approximately 89,000 crore rupees. Engagement remained elevated throughout the session. There was no visible liquidity contraction into the close. Index futures open interest settled near 3,52,000 contracts. The increase was marginal. The move was not futures-led. There was no aggressive long bill driving price. Index options open interest closed near 1 crore 9 lakh contracts. Options positioning continued to dominate structural control. Dealer activity shaped today's behavior. Call side first. At 25,500 strike, open interest reduced by approximately 91,000 contracts. At 25,550. Reduction of roughly 46,000 contracts. At 25,600, reduction of approximately 1,05,000 contracts. This pattern reflects systematic short covering. Earlier in the week, 25,600 acted as a defined supply cap. Repeated rejection occurred at that level. By the close today, that resistance layer was materially reduced. When call open interest declines at upper strikes while price advances, resistance decompression is taking place. This was not aggressive new call writing above price, this was exit. That distinction matters structurally. Now the put side. At 25,500 strike, open interest increased by approximately 1,33,000 contracts. At 25,600, increase of around 1,13,000. At 25,700, addition of approximately 72,000 contracts. Support has migrated upward. The structural base is no longer positioned below 25,400. It is now aligned between 25,600 and 25,700. This represents upward support realignment, a strengthening of expiry positioning, volatility regime. At the money, implied volatility remained stable near 9 to 10%. There was no volatility spike, no panic hedge demand. Premium decay remained orderly. This confirms repositioning, not stress. Intraday structure shift. In the morning, price remained capped under heavy call open interest at 25,600. Through mid-session, progressive call unwinding reduced overhead pressure. Into the afternoon, put build confirmed the upward migration of support. By the close, price closed above the earlier resistance zone. This confirms structural repositioning into expiry -1. That marks structural transition into expiry -1. Structural state at close, call wall weakened, put base elevated, futures neutral, volatility stable, control remains options led. Active interaction band into expiry is positioned between 25,600 and 25,750. Strike concentration now layers as follows. Support zone 25,600 through 25,700. Residual call supply 25,750 to 25,800. No forecasting. This is structural positioning analysis only. Tomorrow is expiry. Today's structure is stronger than the prior session due to resistance reduction and upward support migration. End of desk summary.